Good evening. I know I'm a little late. This whole this whole planning ahead thing is kind of new when it comes to the StreamYard. I actually got the green screen. Let me show that off. I actually got the green screen up. As you can see, my shelf is not covered by this green screen. But anyways, yeah, so we're gonna bring in Daniel Summers and we'll do some shout outs for those of you who are here on time, and we'll talk to Daniel, and maybe we can learn something, and we'll see what happens. So let's start. I see you in the green room there, Daniel. We'll get you in here in a second. Sage, good evening. Max Force, good evening. Plays on Freeway, hey. Well, shoot, my comment was deleted. Well, I think my question was okay. So keep those comments, questions. We'll do those questions when we're coming back. Shannon, good evening. And if you guys have a question, put it in the chat. I don't know. I'll have to go through the whole chat to make sure we can get them all. So, anyways, driver's always late. Yeah, we're not going to do the intros. We'll bring him. Hey, Daniel, what's up, man?
Hey, everybody. How's it going?
Good to see you. Good to see you. Thank you for appearing on the show. I know that you're probably a pretty busy person, and it's Sunday night, and I know you're probably just chillaxing at the house, and I appreciate you giving us some time today, because when it comes to the world of insurance, it can make or break you in this industry.
Yeah, no, happy to be on here. I think I'm getting like a light flickering thing, but I apologize for that. I don't know what's going on. Maybe it's just me.
No, you're good. You're good.
Okay, just my computer then. Okay.
Yeah. So if you don't mind, give us an introduction of who you are, what you do, and tell us a little bit about you.
Yeah, so I do trucking insurance. I'm a big bad insurance guy, No, I try to help, which is very uncommon. Come to find out, I tell a lot of people in the industry that come to me and have questions about like how I operate. Like I have an agency. All we do is trucking. Like if you cross state lines for hire, I don't care if you're doing it on a bicycle with a trailer behind you, as long as you're DOT federally regulated. That's kind of our niche. I had a modified RAV4 one time that was hauling interstate. It's the craziest thing I've come across.
Wow.
It had a trailer connected to it. And, I think they hauled, I forget. It was some sort of special something. It's been a while. But no, anything across the state lines, a lot more semis. We kind of got into some of the intermodal stuff last year, and that's been another like niche within a niche. But no, I tell a lot of people in insurance, like I'm not an insurance person. That's not my background. My dad didn't do it, and that's kind of typical in insurance. I had a friend that I used to work with that kind of drug me kicking and screaming into the industry. And then we were just doing like homeowners, personal auto, like general mill, construction, a lot more construction type of risks.
Mm-hmm.
And I just, kind of drifted towards trucking. That's my space, my thing. I just like it. I like transportation. I used to work for Verizon, AT&T, telecom stuff, B2B sales, and was selling ELDs before the ELD mandate, which was not fun. No one was like, no way. Why would we ever do that? So that's kind of where I got my feet wet in trucking that. And I worked for a freight broker for a little bit. That was an interesting experience. But then, no, man, almost 2.5 years ago, I started my own agency, and just been plugging along. Got a YouTube channel, Truck Insurance. Believe it or not, that was available for a YouTube name in 2021. Like that kind of goes to show like how behind the times are in insurance. It's like I tell people all the time, like the latest, greatest technology we have in insurance is like email. It's like, Jesus, like,
right?
Yeah.
No, I didn't realize you had a YouTube channel. That's pretty cool. If one of my moderators can find that, it's called Trucking Insurance.
Just Truck Insurance. Yeah.
Truck Insurance. Yeah. If one of my moderators can find that, put it in the link.
Good stuff.
I think that'll be pretty cool.
Got a lot more. Yeah.
So what's the best aspects of your job?
So I love new ventures. If you go check out my channel, you'll figure that out real quick. I
Okay.
like helping people get out there and start their own businesses. Um, I don't know. I love it. I like starting new projects. You know, if you came to my house, you'd understand. There's tons of unfinished projects. I like to start new stuff.
Yeah.
Uh, with businesses though, I help you start it and then you go finish it. Like I don't know. But
There
no,
you
no,
go.
it's my thing. Trucking, of course, is blue collar. I don't like to kiss ass. I don't wear white gloves or anything like that. I'm to the point and very task oriented. And if I'm not in something demanding, I kind of just drift off and like not productive. So I got to have something demanding. It's just my personality. But yeah.
So what made you decide to switch into the transportation sector from what you were doing insurance wise? Was there something that was just like
So the first
yeah.
agency I went to go work for, the investors in that agency did high end, like they had a construction business and they
Mhm,
did like high end homeowners, right? Like $1 million plus homes. And so a lot of our customers were coming from them. It was like a complementary business.
mhm,
And I remember just going and sitting down in front of people in these mansions in South Charlotte, and like I kept getting denied by these people. They're very well established. They normally have an insurance guy that's like friends and plays golf with their financial advisors. So like breaking
mhm,
into that was really tough, especially like a couple younger guys, me and my buddy Luke, and we just kept getting a lot of no's. And even on a somebody who's got $1.5 million house, a couple $100,000 cars, the premiums on all that are still less than one truck. So like I could go sell one truck to somebody who's cool and nice, um, or I could go try and please and beg some snooty person to like buy policies from me and just get told no constantly. So like I don't know, and they weren't all like that, but like that's kind of the gist. I like trucking. It's a lot more fun to deal with, and it's also like uh in the like single truck operations and small fleets, the
mhm.
applications and like the legwork for getting a policy written is pretty straightforward. A lot of people are real similar. There's some differences in like when we get into quoting, it does get kind of like there's a ton of variables, but a lot of the time I'm dealing with the same set of variables. When you're in homeowners, man, like I, I feel like you should have a GC license to be able to write homeowners insurance and do it properly. I swear to God, like, and I'm in the Charlotte, North Carolina area. We have a whole
Mhm.
lot of different kinds of construction, so it's like I don't like doing anything I don't feel like I'm an expert at either. And I wouldn't say I'm an expert at trucking, but I do know a good bit now, especially on the insurance side. And I don't know. I didn't really like it that much. So I drifted towards, and the other thing was just like, I'm more of a B2B type of person, not a regular consumer. I like
Right.
the tasks, like, we're here to do business. Let's get this done. Let's move forward. Like, that's me. I'm not shaking hands and kissing babies.
Nice. Um, all right. Well, we have so what got me to Eric was the one that wanted me to reach out to you because he had brought up a point, and we're going to get into the insurance nitty gritties now because when I started telling people about this, everybody had a lot of questions because the world of insurance can be a very confusing place. And when you've got a one truck new authority, insurance can make or break you, especially in your second or third year.
Mhm.
You get your original quote, everything's good to go, you get it all lined up, and then the second year it doubles, and that puts a lot of people out of business. That was one of my reservations of getting my own authority was, I knew that insurance can make or break you. So there's a lot of questions, a lot of information that people don't realize it's out there, and so one of the first things that Eric had brought up was when it comes to LTL freight, what a lot of people don't observe is when if you pick up four different things from say four different customers and the value of each of those things goes above your cargo liability, a lot of people don't think about things like that. Do you want
Yeah.
to elaborate on that more?
Yeah. So the kind of like to better understand it, right? Like when you have your own authority, the FMCSA says you have to have insurance, right? They
Mhm.
only care about auto liability. right? They want you to have typically $750,000 limit on your auto liability, which, unless you're like a logger, everybody has $1 million, right?
Mhm.
Because that's what the brokers want.
Right.
So, and you might have more depending on what you haul and who you haul for or whatever. But the million's kind of the standard, just for auto liability. And then kind of the standard for cargo is 100K, unless, like Eric, you're doing some crazy stuff, then God knows what kind of limits you need. But
Right. Yep.
yeah, 100,000 in cargo is kind of standard for general dry freight, right?
Mhm.
But there's the regulations around auto liability are really strict because that protects public interest, right?
Right.
Cargo is more in the interest of the shippers, a little bit of the brokers, a little bit of the truckers. There's not near as much regulation around it.
Mhm.
I've been doing even more research because everyone keeps asking me now. It's like, gosh, I got to brush up. So there's the Carmack Act that I would recommend everyone go look up and start reading through.
Mhm.
But basically, when it comes to cargo and like LTL, read your cargo policy. There's the exclusions. There's an exclusion section to every single type of policy out there. And so there's limits, like policy limits, which might define types of cargo. And when it also with cargo policies, there's normally two types of cargo policies. There's broad form, which means like you can haul whatever you want except for what's on the exclusion list.
Mhm.
And then there's specified causes of loss, right? Or like specified perils. And perils just means like accidents or things that go wrong. So specified perils would be like only if there's a hurricane there's specified perils, and then there's also like specified cargo, like
Mhm.
commodities. So like you could say all I haul is lumber, so that's all you're going to get covered for, and that might make your cargo policy super cheap, right?
Mhm.
And so everything else is excluded. It's just like the only thing you can haul is lumber on that type of policy.
Right.
Um, Yep. So main thing is look at the limits. And when it comes to LTL specifically, there could be specific limits around specific cargo. So like metals, right? Like copper, steel, you might have $100,000 limit on your policy, like for like combined limit, but
Mhm.
it might only cover up to $50,000 in one category. So like when you're doing LTL, you might have, a mixture of things on the load, and you could have a limit within the category for that specific commodity.
Mhm.
It would limit you to having the whole load actually covered. And then it becomes a mess if there's like a total loss claim, because it's like who gets paid. And, if you had, let's just say the easiest example is with cars. I always like to talk about that. There's a lot of cargo policies around cars have a limit per vehicle. They might have like a lot of people carry 250 when they're hauling cars, but there could
Mhm.
easily be a $50,000 per vehicle limit, and like
Right.
that goes wrong real fast.
Oh,
Uh,
I bet.
yeah, yeah. The worst claim I've ever come across was a cargo claim for an auto hauler
Oh, I bet.
hauling Land Rovers.
Oh, man, yeah, I think, I've seen some bad scenarios like that. So, what kind of things are on the exclusions list? I know a buddy of mine dealt with they loaded salt into his trailer, and it condensated, and he's now fighting a bunch of different things because, it was either the salt or the condensation that's the exclusion. Because
The
you have
wet
acts of God, but condensation is not considered an act of God.
Right. So there's like wetness exclusions. There's um one that comes into play sometimes is like theft, vandalism, mischief. And then the whole acts of God thing is kind of like a super gray area.
Mhm.
Not all the insurance companies, I guess, have the same God. I don't know. Um, I don't get it. But I don't know. Um, Man, I should have grabbed a few just to like go through them. I can uh I can get you some if you want to share like some of the crazier exclusions, but like the limits, not so much weather, but sometimes like if there's a declared emergency, sometimes that is an exclusion for
Mhm.
insurance companies, which really sucks. That's why Florida rates are so expensive in general, is because a lot of claims end up like not getting paid or falling back on like state programs that back up
Mhm.
insurance companies. So it's like bailout stuff. That's that's why there's very little homeowners like open market, like insurance companies that are willing to sell you homeowners in Florida. I mean, it's really really bad. Um, but yeah, that's some of it.
What are some of the, like, I know a buddy of mine, his insurance, he lives in South or North Dakota. His is a lot cheaper than say somebody that lives in California. Do you know off the top of your head which are the most expensive states and which are the cheapest states, just in
So
general?
yeah, yeah, yeah. I mean, on average, I see between 100 to 400 quotes a month. You know, it's a little seasonal, so it swings some. But I see a ton of quotes, and we write in all states now.
Mhm.
All states except for Hawaii, and we're waiting on Massachusetts to come back. But we have a partner agency we work with too, so I still see some of those quotes. Um, so California, Florida, which has gotten a little bit better for trucking, actually. It's surprising over the past year. It's come down a good bit. New York, of course. New York and California are the worst just because of regulations, right? Like
Mhm.
if you're a truck driver, it's your fault. Doesn't matter. It's your fault. Like when it comes to court, it sucks. Georgia's a little bit like that. It's not as bad because there's a lot of political play in some of this, and I think the truckers associations and stuff in Georgia like do everything they can. So kudos to them. But like overall, legal systems play a lot into this, and of course political. But yeah, Florida, Georgia's one of the higher ones. New York, New Jersey, the whole Northeast, like Pennsylvania can be depending on the insurance company. I've seen some really cheap rates out of Pennsylvania recently though. So that's another thing. So like if you get a policy, let's say it's 15 grand your first year, and then the next year, I think I saw somebody's comment up here. Uh went up to 18 in the second year from 14 in the first year.
Mhm.
That could be like you could have done perfectly fine, but the base rates for your state went up. That happens, right? I'm in North Carolina. We have a facility that's backed by taxpayer money essentially that helps the insurance companies for claims. And we had a really bad problem over the past like I don't know 2 decades where a lot of companies were registering in North Carolina but weren't actually residents of North Carolina. So none of the taxpayer money or like they weren't contributing to state income tax and all that
Mhm.
that was going to fund all these claims for companies that weren't really in North Carolina, but getting super cheap rates. This is back to the political part. But
Mhm.
the facility ended up taking like an $800 million loss, I think, in 2018. So in 2019, they saw 40% increases on long haul trucking for
Oh,
any
wow.
company that was backed by the facility. And so, yeah. And then the following year, it was like another 20%. I mean, normally when you hear about rate increases, it might be like 1 to 9%. Double digit increases are terrible, uh,
Mhm.
but they happen. They happen all the time. Other states that can be high, um, Nevada can be, but I think that's related to California companies registering in Nevada. The whole registering out of state thing becomes a huge issue with insurance, and I blame Progressive. They kind of let you do whatever you want because their system doesn't limit it, and a lot of people
Mhm.
don't understand the repercussions that can happen down the road. Like you can go get a policy today in another state with a Progressive policy, doesn't hurt
Wow.
you today, but down the road when you need to get other insurance, switch to something cheaper or you become eligible for better markets, they're going to see that and be like, the hell are you doing? Like you're not a resident there, your license isn't there. And a lot of other insurance companies have stipulations like Berkshire, for instance, that's another one we write. And they want you to have all the drivers in the same state. They don't want you to have out of state drivers. Um,
Hmm.
yeah, I mean, registrations can, be a little messy too, depending on state filings that have to go along with trucks you own. Um, yeah, I tell everybody keep everything in the same state, and if you live in a horrible state, you're a trucker. Try and move if you can.
Right.
Like you're all over
Um,
the place anyways. Go pick a better state to live in. Go to one that doesn't have income tax or something. I don't know. Well, it's not that easy,
y-
but like
yeah, that's why I was glad to bring you on, because sometimes it feels like there's no rhyme or reason, and I've got, like, my phones are blowing up. I've got people commenting, so this might be a while. So I hope you got a minute. So,
the
um,
whatever reason part pisses me off too, right? Because everything the insurance companies rate on today, like all
mhm,
the variables that pile into quotes and spit out numbers for what you pay, are
mhm,
based on data from 10, 20, 30 years ago. Like we're not dealing with anything that's new and updated. Like most of the insurance companies that are starting to ask for ELD data, like Progressive gives you a discount. Century just started a discount with Motive. Like they're trying to get there, but everything they're doing right now is just data collection. They're not, they might be like giving you a discount, essentially paying you for your data, but it's
Mhm.
not going against you. The worst that happens is you lose the discount if you really suck, right? Like if you're just slamming the brakes and taking crazy hard turns all the time and smashing the accelerator, like that might lose your discount, but it's not like they're going to increase rates. They can't actually do that yet.
Right.
um,
Yet.
yeah. Well, every insurance company wants to go to UBI, user based insurance. They want you to pay per mile, and that's what it's gonna end up going to eventually.
I believe that's what the carrier I'm at. That's what we're on is a
Yeah.
per mile basis. So,
Okay.
all right. So, I had someone ask, how do you handle used versus new goods? Are both covered at $2 a pound? This is from a Canadian freight broker. Is there any difference in price if you're hauling something that's used, like say used machinery versus new machinery?
Most of it. So if it's brand new, then it's just like having a brand new truck, right?
Hmm.
Um, but with cargo, again, it's less regulated, so it depends on the company. A lot of people will hate on Lloyd's of London, right?
Hmm.
Because they've had bad experiences. Lloyd's of London writes some of the worst cargo insurance, but they also write some of the best. It just depends on where they get the Lloyd's policy from, because Lloyd's policies are completely customizable. And there's like a million different Lloyd's markets. So you could have a really awesome, solid cargo policy that protects the trucker, the broker, the shipper, everything from A to B, right?
Hmm.
And everything in between. And then you could have some with just too many exclusions, lots of legalese that, keeps them from having to pay out claims. But new versus used, there's some discrepancy there that I've seen, and it sucks.
I see. Well, thank you.
Yeah.
Number two, if a carrier has $150,000 cargo insurance and the full load is worth $142,500, is shipper fully protected if load is destroyed? Does the
Good.
value need to be declared on the BOL for full protection?
Where was the numbers
Uh,
again? Sorry, I'm dyslexic.
um, if a carrier has 150,000, this is on my phone, not on the
Okay,
comments,
150 versus what was
and the
the
full
five?
load is worth 142.5.
Yeah.
Is the shipper fully protected if load is destroyed? Does the value need to be declared on the BOL for full protection?
I would say yes. I would say always declare value. Declared value, though, when it gets this is another thing when it gets to appraisals, like with the claims adjusters. You could say it's worth $1 million, and you could have $1 million cargo policy, but you don't get paid $1 million because of market value. So the adjusters can go and they'll go look at previous loads and sales. They'll do everything they can to establish like a real market value, and go off of that. Which then as soon as you go get an attorney, you rarely get past arbitration, and they settle with generally pretty close to what you want, sometimes more. Depends on the situation. I've seen where people get more.
The third question: explain when the carrier insurance would decline a cargo claim.
Ugh. Why would they deny a cargo claim completely? Would be kind of rare unless there was something fishy going on. Or if you just meet one of the exclusions, if it's an excluded commodity. um Radius is one that I come across every once in a while.
Mhm.
So if you say you're only operating within a 300-mile radius, a 500-mile radius, 1,000-mile radius,
Mhm.
every policy is completely different, so there's no standard when it comes to cargo. There's very little anything related to standard. There's a structure for a policy, but what they put in that is whatever they decide to. So it's like it's the most important thing I would say to read is your cargo policy. If you don't read anything else, read the cargo policy. And like ask your agent all about it. Uh,
I can think of a scenario. So, I know somebody that dealt with this. So it was a load of windows, and the driver was not allowed on the dock to secure the load. They told them they secured the load. They said they had handled it. So they closed the doors, they sealed it up. He gets down the road, gets to his first delivery. Some of the stuff is damaged.
Because it shifted?
And, huh?
Was it because the load shifted?
Yeah.
Okay, that
And so there's no hard brakes on the ELD. There's no incidents that can be proven that it was the driver's fault. And so now the carrier and the broker are going back and forth trying to play the blame game on who's going to pay for that cargo claim.
it should be the shipper.
Yeah, and that's part of so the shipper's declaring innocence. The broker's like, well, who's going to pay for this? And the carrier's like, well, we ain't, because of these different
Was the
things.
driver allowed to inspect the load at all before it was sealed?
I don't believe so.
Then no, that's on the shipper.
Yeah.
I would
So
fight that all day. If I
so
don't get to inspect it and you seal the doors and they're still sealed, or yeah, if they're still sealed, like that's on the shipper,
yeah,
100%.
that happens a lot in the reefer world, because you back into these docks that you don't even open your doors. They
Mhm.
open them from the inside, and of course, because of COVID, a lot of them don't allow drivers on the docks anymore to inspect the cargo, and then they'll actually, and this is why everybody should read their bill of ladings and the rate cons, because they'll actually show, like I had a driver tell me the other day that he showed up at the shipper, and the shipper was like, all right, sign this BOL while we load you, and on the BOL it says driver examined, secured, and counted the load, even though they hadn't even started loading them yet. So I mean so there's a lot of shenanigans that go on with that, but the reefer world is especially prone to that, because how do you know the condition of the watermelons that they just put on your truck if you can't go back there and to inspect it? So
You say watermelons, that reminds me of a customer I had a long time ago. He went to prison with watermelons from Miami.
oh wow.
Yeah, it was drugs. It was drugs in the watermelons. I remember.
Oh shoot.
Yes. I remember I have a friend that worked like in between Homeland and like DEA.
Mm-hmm.
And I just remember like I heard this name and I Googled it, and he had prior stuff, right? And we had just written this guy a policy, and I was like, oh my God, this could be, because like he's like, yeah, all I haul is watermelons. It's like year round you haul watermelons. Like
That's not suspicious or anything.
yeah.
All right, tell us what's the differences in coverage when it comes to dry van, flatbed, and reefer? What are the differences between the three? Is there major differences? Is there
Well, flatbed's got all kinds of trouble with tarps and exposure to the elements.
Mhm.
Wetness exclusions with tarps and flatbeds that's something your agent like should watch out for you.
Mhm.
Um, Here's the problem: a lot of people don't understand all the variables in trucking. Like if you think of trucking and you don't know about trucking, you probably in your head you just picture a tractor with a dry van trailer, right?
Mhm.
And then if you start digging, you might think of a flatbed, but then like what do you put on a flatbed? Oh, like big equipment, construction materials. Like how's the weather going to hurt that? So if you don't have experience in it, then there's well, it's like you might not have experience in it, and then there's also like no training for this.
Mhm.
There's the MCIEF organization, which teaches like trucking insurance, but it's more like the legal side of it, less about the actual business of it.
Mhm.
They get into some of it, but like otherwise, you just got to learn it on your own. And it's
Wow.
yeah, I mean, like you don't learn anything in insurance licensing about trucking. You learn a little bit about like uh it's all about the legal side. It's all about don't get sued, for selling people insurance and like protecting public interest. Um yeah, it's tough. So differences in policies, again, just exclusions and limitations, like if you're dry van freight, there's a few things to watch out for. Um Wetness exclusions, I'll keep repeating that. That's been a popular topic. What else? Watching out for vandalism and theft. I come across theft every once in a while. I've actually, as far as cargo claims, probably had more theft cargo claims than any other type of cargo claim,
Have you
surprisingly.
have you seen an uptick in in cargo theft here?
Yeah. Yep, yep, yep. Funny
Is there
enough,
s- is there certain areas that are worse than others?
Cleveland, Ohio, that's where trucks
Really?
go missing.
Oh, wow.
Yeah, dude, it's weird. It's weird, and what's really weird is most of the insurance companies are around Ohio, so it's like, why? Like, but yeah, a lot of trucks go missing in Ohio for some reason. Um, Trucks go missing in Miami for sure.
Mhm.
Uh,
What about Laredo or
I
any
don't
border town like
know.
Nogales?
I haven't heard too many issues there. I do. We do. Texas is our second biggest state that we do business in, and
Mhm.
Texas is pretty easy. You know, like we don't have much trouble out of Texas.
Oh,
Uh,
wow.
yes, surprisingly,
Huh.
we've also got really low loss rates. Like we take most of our customers from our YouTube channel,
Mhm.
which tends to like actually be like higher quality customers. So thank you guys watching YouTube. You tend to have less claims than anyone else. Surprisingly enough, I didn't like plan it that way, but it's a good thing we figured that out. We have like 75 to a roughly 75% lower claim rates than everyone else. I guess it's because everyone's trying to self-educate on YouTube and like, you're spending time learning about this type of thing if you're watching. So you're doing better than the other guys.
Yeah, YouTube's become a how-to platform. Back in the day it was more about creativity, but now it's about how do I clean the air filter on a this and this tractor, that kind of thing. And
Hmm.
and and, and a lot of people have looked up to the YouTube truckers on learning the business side. I do a morning report almost every morning about how I look for spot freight, that kind of thing. So that doesn't surprise me what you're telling me. So another question I have from CDN is explain reefer breakdown insurance for cargo claims. What does the carrier need to do if the reefer did stop working? Are old reefers covered or only those that can get a report showing reefer temps?
Okay. You want documentation around everything. CYA, right?
Hmm.
Obsess over documentation if you can, right? And then each insurance company is a little bit different when it comes to refrigerated units. A lot of them have a hard stop at 10 years of age, or they'll want to see like a receipt, of the unit being rebuilt.
Hmm.
And they generally want that from someone reputable, like within, maybe like a maintenance network, or they just won't accept it at all. But it's always worth asking. I've done it for quite a few people. Um, so 10, maybe 15 years on some of the better ones. Um, that's just kind of limitation around insurance with them. As far as claims, oh, and they can have specific commodity exclusions too. So a lot of times I'll get asked like, "Do you haul meat?" Right? Like,
Hmm.
what type of meat? It could be a certain type of animal, that they
Hmm.
don't, and is it frozen or is it like hanging? So that's one where like the policy could just have those exclusions. Temperatures. They might even have an exclusion for certain lower temperatures. That could happen too. So, uh, and the problem is like especially with seasonal stuff that requires reefer coverage, um, you might be hauling whatever just because you need to get out of an area, and
Hmm.
like that's where I would imagine the majority of the issues come from, right? Like you're stuck somewhere, you take the load because it's worth it, but then something happens and you didn't know that that specific thing wasn't included in your cargo coverage with reefer breakdown. So, and like, it bugs me sometimes when, I mean, it shouldn't bug me. I say that. It's just like when people say, "Oh no, you can't do that," right? And it's like,
Hmm.
well, it's right here in the policy. Yes, you can. Like they had one bad experience because someone else had a slightly different policy, and it's like, well, this I'm showing you. Here's the contract. Like here you go, Mr.
Hmm.
Broker. Here it is. Like just read it. It's right there. Like
Wow.
yeah.
All right, so now we're going to get to, and again, I appreciate this. Now we're going to get to the people in the chat, their questions, and we're going to start with WCF Invader. Does using tow coverage affect renewal premiums? How much would a new truck add to the premium versus a used truck? 200,000 new versus 50,000 used, what's the best way to cause lower premiums come renewal time? That was going to be a question I was going to bring up.
Okay. Tow coverage affecting renewal premiums, right? Or just tow coverage being counted against you,
Right.
right? If you had one and it's a lower tow bill, and that's very vague, right? Like if it was under $5,000
Mhm.
and your premium's $20,000, probably not going to hurt you. But if it's repetitive, that's definitely going to hurt you. That's a generalization, okay? Because some insurance companies don't care what it was, even, you hit a deer, that's not supposed to affect you. Some companies still count that against you, and it
Right.
sucks. Some companies look at the total payout. Some
Mhm.
companies look at total number of claims. You could have like 5 windshields replaced and now you're screwed, right? Like it just depends on the insurance companies we're trying to go place you with. So like that's where the agent side, it's like, okay, what have we got to work with, and where can I go paint the prettiest picture of you to an insurance company, right? But yeah, so it just depends. Like most of the time, not so much. If it's a huge tow bill, definitely, it could. Some insurance companies just don't even care if you have one claim though. Like like one could kill you depending on what your options are. If you're newer, one claim can definitely kill you. If you're older, one claim might not. Right? Like an
Okay.
older means 3+ years of business with very little claims. If you've got CDL drivers, they all have at least 2 years of CDL. Right? That's how you have the most options. Those scenarios right there. Be more than 3 years old. Everybody's got at least 2 years on their CDL, and try not to have any claims. Then you have the most options possible, right? Once you hit about 5 years, you've got almost all the options. How much would a new truck add to premium? Okay, so a $200,000 truck versus a $50,000 truck. Most all physical damage. So like, all right, let me back up. Newer truck on auto liability can make the rate go up a little bit, right? Older truck makes the premium go down a little bit until it's like more than 20 years old. Then it could actually make the auto liability go up a bit.
Hmm.
I've seen that a little, between different insurance companies. So I'm going to try everything I talk about here is going to be kind of like general rule of thumb. But if we wanted to go really deep, I could talk about like individual companies and
Hmm.
individual programs within each company that can vary. So that's even, like I always hear like, oh, my buddy has this company and he did this. It's like, okay, right. You're not eligible for that there yet. Like, or that
Yeah.
doesn't apply to you're in a different state. So it's totally different written program. Um,
Yeah, I
there's,
think that's why the generalizations will be best because
yeah,
everybody always wants to go. Well, my friend said.
yeah. I call it Truck
So,
Stop News Network. Um, but for physical damage, right? That's where you're going to see the biggest difference in premium on a
mhm.
newer truck versus older truck. So like you take the total value, that 200,000, right? And you might get a physical damage rate of 2% on the very low end, and I've seen like 11% on the high end, where that's your annual premium. So you take just the value of the truck times 2% or 5%.
Okay.
I'd say 5 to 7% is generally pretty average for people under 3 years in business. And then I wrote one not too long ago. We got like 2.13% PD value, which was pretty nice. So and he had 180. He had like $1,780,000 Volvos. So it was
Oh
nice.
wow,
Yeah, yeah. We
nice.
saved him over 100 grand a year. He was happy.
Dang,
Yeah, but
that's
that was going into his 4th year in business, so it made a huge difference. Like the gates open up.
that's good. Well,
Yeah,
that brings us to this question. WCF Invader says, in my first year, I had 2 clean inspections and no violations, tickets or accidents. Premium went up from up to 18K to 14K. Will third year finally bring reduced premiums? I'm a Missouri-based carrier.
more than likely, yeah. So that 14K to 18K, you didn't have any tickets, clean inspections, all that. Like you were squeaky clean, right? But your state wasn't, and that's what's hurting you. You had base rates go up in your state, and that's why it went up. Now, a lot of companies, Progressive, Berkshire, AIC, Canal kind of like after your second year, going into your third years can be better. And then a lot of other companies coming out of your third year, going into your fourth year makes a big difference. And it's not just the company you have, it's the other companies that will open up and start working with you that wouldn't take you before. Um, Generally, I see people dip going the third year. I mean, actually, recently, I'd say the last 3 months, we've probably had an average decrease across all our clients with various markets, like various insurance companies. I've seen a lot less. Like our total book of business is actually shrinking a little bit on the renewal side. It's good, like on the per truck rate. Like we have coming out of COVID, like there's trucks available for sale now. Like people don't have to get on wait lists or pay twice as much for a truck. So we are seeing a good bit of people adding trucks right now, which is cool. But yeah,
Well,
third,
there was a record number of authorities started. I think the year before last. When our rates in the spot market were going through the roof. So I imagine that's probably decreasing because I know that a lot of
tremendous.
the
Yeah.
people.
Yep.
Yeah, are you seeing an exodus of people leaving their authorities dormant?
I talked to quite a few other agents that do trucking, right?
Mhm.
We've had, I don't know, we have 350 clients in my agency, and we've lost a few, not 10%. And I know other agencies that are hemorrhaging. Um, the, I won't name them, but there's a big one out in Texas that was at I think like 32 million in premium for trucking, and in the last 6 months they're down to like 23, 24 million in total premium.
Wow.
That's from companies just closing. Yeah.
Let's see. Which insurance companies do you recommend the most? What's the best strategy to keep insurance under control when growing a carrier, adding more trucks and trailers?
Um, that's a good one.
It is.
So starting off on the right foot is the most important thing, and that's where my channel came from. Like I deal with all these new ventures, right? And I see people go jump into it kind of winging it, right? And like that's the worst idea ever. Um when you're new, right? And not even brand new, like first year, I'm talking the first 2-3 years, you have no history of trucking with your own authority, right? So they're looking at your company, not necessarily you. You could have been driving for 20 years, leased onto somebody else, whatever scenario. They don't care. They're looking at your company. So if you have no history on your company, a lot of times they're looking at your personal credit where they can. Not every state allows that. There's a handful that don't allow credit-based rating. So when there isn't credit-based rating, most of the rates suck. Um, if there is credit-based rating, the people with good credit have awesome rates, and the people with bad credit have pretty shitty rates. So if you're in one of the states that has credit-based rating, get your credit right and your driving record perfect. So if you're in a state that allows you to pay an attorney to make things go away, do that every time, especially if you're going to drive for a living. And that's easy to say, right? But like, yeah, those are things to consider in the very beginning, or like, you can clean it up afterward a little bit. So like progressive is the big one everyone starts with for the most part. Like depending on what state you're in, they cover 70 to 90% of the new venture market share in every state.
Mm-hmm.
It's nuts.
Wow.
How's that monopoly? Uh, so for the ones that are credit based, like it doesn't really help you at renewal if you made your credit better in the first year. So the only way to get around that is like switch to like Berkshire or somebody. Like if you bumped your credit score up significantly your first year in business, consider switching out. Or there is another little hack. You can have your policy re-rated at renewal. So basically they're just going through the whole underwriting process over again. So they will like re-ping the credit. It's a soft credit pulled, and they're not even looking at your credit score. They have their own proprietary like scoring model. So that's one thing that's possible. You ask to get re-rated, like basically have the whole underwriting process started over again, or switch to another company. Berkshire is another one. Coverwell's been popping up pretty fast. They're an MGA though, so that's a whole different thing we could talk about in insurance. Direct versus like the wholesale markets. What else as far as keeping? Okay, so that's just getting off on the right foot is important, or trying to fix it after the first year. Then if you're going to try and grow steady, don't go super fast. If
Like
you
what percentage? I've heard like no more. Like you don't want to like be up to 10 trucks within 2 years or anything like that. I
you
mean,
can, you totally can. You could do 10 trucks in 6 months. What the insurance company's really gonna look at there is how fast are you adding and removing people in trucks? Like, are you adding a driver and then pulling them off a week later? Because then you're winging it. You're slinging from the hip, and that's not smart. That's high risk. So, like, how do you solve that as the authority owner? Like, you don't know if a guy you're gonna hire is gonna stay, right?
Mhm.
So, like, got to do things to incentivize people. I would say the longer your hiring process is, the more likely you're to find better candidates. There's a direct correlation there. If you can find
Mhm.
somebody that's interested enough to like wait a little bit to come work for you or go through a longer onboarding process, then they're more serious about staying, right? Like you've got something good, right, going on if they're willing to go through that. So that's hard to do though, right? Uh,
Yeah.
Truckers are generally going to go jump to the next company for a penny more. Like it's about the money, right? uh,
Right.
or promise of time off, promise of direct lanes, whatever. Getting home on a decent schedule, that type of thing. And I would want that too. uh,
Right. Yeah.
you know um Percentage wise though, it can be a percentage. This is again depending on the insurance company. And like Progressive, what I've experienced here is they don't care how many you add, as long as there's not too much turnover. They prefer them all to be in the same state. So
Mhm.
try and keep like if you can keep all your drivers in the same state, like licensed in the same state, that you're going to be golden, right? Because you're going to have more options. The problem is if you start with Progressive and you start growing your fleet there, they're going to let you do things that none of the other insurance companies are going to do. And then once you burn the bridge with Progressive and they cancel your policy, you've got nowhere to go. That's why a lot of companies go out of business when they start trying to grow fleets, because they end up with no other options, or they have to scale back down to like one truck. Hopefully they didn't go out and finance a ton of trucks.
Mhm.
Um, some states are better too. Like North Carolina, we've got more options. There's a few, there's a handful of states that have more options for insurance because there's normally like some kind of state backed program. Um, but for most people, you've only got a few options in the beginning. So like you got to be strategic. You got to be like steady and consistent. Um, but it definitely is better if you're gonna start with like two or three, right? Versus one, because that percentage thing can play a little bit into it. So like if you go from 3 to 6, that's 100%, right?
Mhm.
You go from 1 to 6, that's 600%. So like if you can start with a few, if you and you've got some buddies, whatever you're thinking about, pulling together, it's gonna make sense with lowered costs and everything. Um, do that. Start with three. The down payment for insurance is going to be hell either way if you pay individually for three or three all at once. Like, try and be strategic because that can help you grow too. But then there's like navigating the insurance company. So like I said, there's only a handful in the beginning, and then there's more options that open up. And I'm working on some content around this, like a roadmap, by operation, by state, and what insurance options you'll have over time. So let me keep working on that.
And it's not the next question, but Cascade had a question that's related to that. Whoops. So if you have an owner operator signed on, should you plate each truck in your home state? So like if your carrier's like say out of Michigan, should you try to plate each truck out of Michigan? Does that make a difference at all?
The plating, not really. The
Okay.
driver's license is what matters. The
Okay.
garaging address of the truck is what matters. So, like, if you try and say the truck is garaged in North Carolina, but you've got a California driver, where you
Mhm.
flying them out every time they need to get in the truck? If you're saying it's garaged in North Carolina, that's the big problem is garaging address and then like proving it. A lot of
Right.
people say they park somewhere they don't actually, and the underwriter
Yeah.
checking Google Maps, and they'll ask for lease agreements for whatever property you say you're garaging at. Like, and then if you can't provide proof, then canceled.
Right. So CDN says, what does a carrier do if they're hauling freight higher than the exclusions? Example, car hauler max 50K car, but they're hauling a 60 to $70,000 car.
If something happens, you owe the difference.
It's pretty straightforward.
Yeah. Uh, Try and negotiate.
All right. Let's see. Let's get
Yeah.
to.
Most of the time, you don't have total losses. I mean, it happens, but like you're gonna have a whole lot of like minor losses in between. And so that's I'll talk about that a little bit. Like people always like to talk about the big fleets, are self-insured. Most of them
Mhm.
are not self-insured. They do risk share. So like, they might pay half of all their claims. And there's a risk pool governed by an insurance company that, there might be 60 big fleets paying into this risk pool and they share best practices, they share training programs, they do all this stuff, which
Mhm.
is why if you've ever worked at several different big trucking companies, there's some very similar things, right? Because they're
Mhm.
sharing a lot of that. Yeah, that's the difference.
Cascade is asking, what are most common exclusions for open decks?
Mm, uh, man, like there's always stuff around tarping. I see that a lot. But I wouldn't say anything super common. I'd say just like tarping in general and specific around commodities. But like I said, they're not very regulated, so all of them can be wildly different. And a lot of them don't address things specifically about open deck or flatbeds, exposed freight. So it's and if you've got an agent that doesn't typically do anything with flatbeds, or open deck, open freight, exposed, then they're not going to know the difference. They wouldn't know if you're in a dry van, reefer, whatever. Like they're just going to give you a cargo policy for whatever they have access to, and that's troublesome.
Does it become more complicated with flatbed because you could have damage from tying it down, you could have damage from not tying it down enough, and that would be, to
Yeah,
me, in my eyes, that would be hard to prove
like
whether the
improper
driver was at
strapping.
fault.
Yeah, yeah. Like then a lot of these would typically end up in, like either just maybe getting denied or an arbitration situation. They might not go to court, but they'd at
Mhm.
least get attorneys involved and start arguing. And then as soon as you get attorneys involved on smaller stuff, like under 100,000, they just want to get stuff paid and settled super fast. So they get way more lenient just to not rack up. Because as soon as you go to court, then it's 6, 7 times as much as it would have been just settling. So yeah.
How common is our how common is insurance claim denials? Like, how often do you?
I don't come across them too often.
Okay.
Um, our process is a little different though. We require everyone to kind of like schedule calls with us and kind of consult over their operations, what they're trying to do, so we know where to put them. Like you can't just go buy a policy from us and never talk to us. We want to like have a good understanding of what you're doing and understand how it's going to work, especially if you're trying to grow. We like to talk to people about that a lot because every insurance company is different about driver hiring and the way the billing works. If you're adding and removing trucks, if you're doing the lease own operator thing, because that might happen frequently and you can screw up billing with some insurance companies super fast and then you're in a very bad situation. Um, we don't come across a whole lot of denied claims. Normally, denied claims are when you don't tell me about a driver you hired or a truck you were running under your authority temporarily or something. Like if it's not listed and you're on like if you're new, all of your policies that can be written are on scheduled policies, right?
Mhm.
So like the truck's got to be listed, the driver's got to be listed. Once you have a fleet of 25, 30 trucks and drivers or more, you go on a different basis of whether it could be like a quarterly or semi-annual, even annual reporting basis where like
Mhm.
you just tell them how many trucks you've hired and fired over the past year, which is
Mhm.
kind of nuts to me. Or you might go off of gross receipts, with just revenue. They rate you based off of revenue, or like the UBI type stuff where they're looking at mileage. Um, but yeah, if you're newer, everything's got to be scheduled, and that's where denied claims happen. Specifically for cargo and physical damage, auto liability. When you're an interstate motor carrier, auto liability is covered on anything that runs under your authority in most scenarios. There's
Mhm.
some where it's like blatantly like, material misrepresentation or fraud on behalf of the motor carrier.
Mhm.
So they can, like an insurance company can deny it, but the FMCSA holds the insurance companies liable for covering you and your operations. So like you got to keep your trucks and drivers listed on your policies. That's yeah.
Sage is asking, how important is credit score?
When you're
Is that
new,
a is
when
that a personal credit score or business credit score or both?
Um, I don't know of any that actually look at a business credit score. Your currency for like credit scoring as a trucking company becomes your loss runs once you've been in business 3 years.
Mhm.
So if you've got claims, you've got a low score. But in the beginning, yeah, credit is a huge player if you're in the states that allow for that, which is most of them. Most states allow for credit-based premium rating. So it's super important. And Progressive being the biggest one that most people come across. I mentioned it earlier. They don't go off of like a hard, Experian, or they pull from the bureaus, soft pull again, but it's not like a FICO 8 or 9 scoring model that they're going off of. It's more proprietary. Like you could have two people that have a 720, but one of the guys keeps buying new cars every year, but maintains a 720 credit score. They might look at like the inconsistency in what's in the report as more risky versus just blatantly looking at a score from one of the score. Like Credit Karma's like Vantage 2.0 or 3.0, like all of them. There's all kinds of different scoring models for credit. So like it's not like they go off of one of those. It's basically how you use your credit.
Does that affect your rate? So if you have two identical people with identical situations, one's got a 700 credit score, the other one's got a 600 credit score, is the guy with the 700 going to get a better rate from you?
Most likely, yes. Yeah.
Okay.
Yeah.
Truman asked, new authority suburbs, Detroit quoted 25,000 one used truck per year. Is this crazy?
In the suburbs of Detroit, the further you get away from big metropolitan areas, the better. Most of the time,
Why
Michigan's hot.
is that?
Accidents.
Oh.
Accidents happen in the metropolises. Um, 25K in Michigan. The value of the truck, your age, your driving record, credit score, all that goes into play. But 25K seems like it's a little bit on the high end for like a semi. If it's 40, $50,000 truck, that seems a little high.
Yeah.
But I'd say Michigan, like 15 would be kind of low in Michigan compared to what I see for new ventures. All right. Like we always got to be specific about who we're talking about. People always try to compare rates, and it's like, man, there's a lot that goes into that. Right. Like, yeah.
Yeah, Clyde's a big fan. He said this guy knows his stuff. When I got my authority, who referred me to a company in Utah, beat everyone's prices and got top notch coverage.
Well, awesome, Clyde.
Marty has a question here. Is there a difference between intrastate or 400-mile radius? Like, so I know a lot of people
It's
will
a difference right
do.
there, yeah.
So like let's say you only wanted to run Texas intrastate. Obviously, that's going to be more than a 400-mile radius. I mean, is that like, is there an advantage for a new authority to only do a certain amount of states or a certain amount of radius? Because there was a truck I dispatched that I can only dispatch him within a 500-mile radius of his home state because of his insurance.
This is
Um,
Yeah, this is two different things. So
mhm,
you could have a 50-mile radius and be interstate, right? Like Charlotte, where I'm right outside of Charlotte.
mhm,
It's 20 minutes to South Carolina. Like, and I know a lot of operations that go back and forth between, Charlotte metro area and like Lancaster, Fort Mill, Rock Hill in South Carolina. And
mhm.
that's, within a 50-mile radius, but you're crossing the state line. Um, Having the interstate authority, and with that on your policy, you have the MCS 90 endorsement, which is part of what makes you active with the authority with FMCSA.
Mhm.
The cost of that can be different, like wildly different. Like you could have a 50-mile intrastate policy versus a 50-mile interstate policy, and they'd be significantly more expensive for the interstate one because technically, like I said earlier, like with the auto liability, they're covering any truck that could potentially operate under you, and you technically could go beyond that 50-mile radius, and the FMCSA is still holding the insurance company liable for your operations. So that's why you would see a significant increase for having the same radius but being able to go out of state. in a for hire capacity. That's the other difference. Like if you had, a intra-state policy, but you have a mechanic right over the state line. I know this because I had a guy ask me about this not too long ago. Like,
Mhm.
if you're not crossing the state line in a for hire capacity, fine, you're still within your 50-mile radius. Go ahead. And a lot of the radiuses are like a 80 or 90 rule. So like, as long as 80% of your loads are within that radius, you're okay to go out of it a little bit. 10% of the time, 20% of the time.
That was gonna be my next question because there was a couple of times where the driver called me. Is like, "Hey, really need to make some money, so put me on a longer one." I'm like, "Isn't that beyond your radius?" And he goes, "Well, I'm allowed a certain percentage." How do you calculate that percentage?
How do you calculate it? When there's a claim, right,
Uh,
and you smack into somebody, across the coast or
mhm.
across the continent, um, they're gonna pull your loads. Like, where all have you been? They'll want documentation on all of that, and they'll calculate the miles.
Oh wow. Okay.
Yep.
Um, WCF Invader, he's got some of the best questions tonight. How do you shop insurance agents? What would be some good questions to ask before picking an insurance agent? Is it best to have an agent based in the same state as the carrier?
The only reason I'd say have a agent in the same state is Michigan, Massachusetts, Florida, California are some states where like a lot of other insurance companies like they have more like the state has specific laws, so some insurance companies might only work in that state or other insurance companies might not specifically work in that state. That is one reason why I'd have somebody in your state, or time zones, right? Like if you're West Coast, like I'm East Coast, we don't do a ton of business out west yet. We're about to hire someone bilingual and to work that shift so we can cover West Coast till 5 6 p.m.
Mhm.
Pacific time. That'd be another reason, just for service. Like we also have uh, a system called NowCert, so you can issue your own certificates of insurance, and it comes from our system to whatever broker you're going to. So like we have that for everybody that might need something. Plus, we work around the clock right now. It's myself and 3 other agents, and I mean we're. I was working till 2 a.m. last night on a Saturday night. Like,
Oh wow.
yeah, like
Well, I'm definitely more appreciative of your time that you're giving us today. I really, if you guys don't know, this is Daniel Summers with Charles String Incorporated. He's got a YouTube channel called Truck Insurance. And if you guys have any more questions in the chat, let me know. I think there's a few that I might have skipped over.
I could have
Um,
I could have answered how do you shop insurance agents though. Um, Stay away from people that do mixed insurance. Like what I've learned is if you're going to do trucking, it needs to be the only thing you do. We do a little bit of freight brokers. I've written personal lines for like customers that have asked me, but I don't have a bunch of personal lines like auto markets. So
mhm.
like basically if you've got a progressive policy, I can generally write you a progressive personal auto policy to get you the discounts and stuff. But I'm not your guy for homeowners, personal auto, and umbrella, any other type of business you have. Like if it's not trucking, that's not what we're focused on. We are built for trucking. Like my website's pretty awesome. I've done most of it myself. And like we're like being built for it. Like if you're gonna shop, go check out their website first and foremost. Make sure most everybody that does trucking can now uh they have certificate systems where you can go produce your own COIs. I feel like that's something a lot of them have caught on to. I started doing that at the prior agency. I set that up in 2018. So like most everybody should have it by now. And then just markets. So like when you talk to an agent, like what markets do you write with? Like what insurance companies? If they're like, oh, I've got Progressive, like what else do you have? I could go on for hours talking about direct markets, direct insurance companies versus wholesale or MGAs. Um, when you're newer, stay away from MGAs.
What is an MGA? I mean, in your most condensed version.
Yeah, MGA is like the seller's agent when you're buying a house.
Okay.
They represent like I represent the insurance company, but I do it kind of like on your behalf, right? Like I'm your like the trucker is who I'm most interested in.
Mhm.
Like I have multiple insurance companies we work with. Like I know what they need. Like I'm not going to try and take you to one that's not a good fit. Um, MGAs or the actual brokers, like sometimes people say insurance agent as broker, but like in our world on the insurance side, brokers are MGAs, and they specifically work for an insurance company. They might do the underwriting themselves, or they work with underwriters at the insurance company. And the majority of these companies, the insurance companies, don't do their own billing. So you have to go through third parties for billing, which creates nightmares. It works fine for people that don't make any changes, right? Like if
Right.
you're never going to make a change throughout the year, you can find some cheaper insurance that way. And we'll do it. Like we write Cover Whale. They're the first like real digital MGA. So they have like an online platform, just like Progressive, Berkshire, some of these others.
Mhm.
Um, but they are still an MGA and they're writing policies through other companies that are financed with a third party. And like, if you don't know what you're getting into, it can be a mess. But I say if you're new, stay away from them. Once you're established, though, it's a totally different game. Especially if you're trying to grow, you're more than likely going to have to go that route.
That's good. I noticed that Don also says, I noticed that trying to shop agents is difficult due to the insurance agents only allow a quote to be run every 60 days or so. How many insurance companies do you write with? And
Every
then
60 days or so, I don't agree with that. Like I don't like as an agent, I'll quote you every day if you want me to. Like it might not change, but uh like I said, we're built for it. So like for us to generate a quote, like it might take time depending on the company we're trying to get quotes from, because
Mm,
that can be a lengthy process. But
mm.
like taking in data, everything we need for getting quotes, like I've automated a ton of this, and it's not gonna like bog us down. How many insurance companies do I work with? A lot. Not all of them. We don't do a whole lot in like the bigger fleet space, so we're not dealing with like Century or well, I've written Northland in the past. I just don't have anything with Northland right now. I write with Canal. We're looking at getting appointed with National Interstate, which is really cool. We're gonna have like an exclusive program with them, so that's exciting. Um, yeah, but I mean, depending on which state you're in, we stay away from risk retention groups too. I don't, not a huge fan of those. I feel like too many of them were Ponzi schemes. Um, if you haven't
Well,
watched The Laundromat on Netflix, you should watch that before you sign up with a risk retention group.
yeah, Don says I meant companies. The insurance company only allows a quote to be run every 60 days or so. Lancer was one of the companies that I had that issue with, he says.
Um, they're just not like. Uh, why would they only let you quote every 60 days? Why would you want to quote from the same company more than every 60 days? I'm not sure what the
Yeah.
intent there. Like, if you're gonna rewrite, you would only rewrite like once a year if you're gonna do that. Um, it wouldn't be beneficial to do it more than every 60 days. That would also be a nightmare for billing.
Yeah.
Yeah.
And Cascade, are insurance brokers better than a company that only has one or two options available to quote?
Well, insurance broker like the MGAs, you can't go to them as a trucker, like as a customer. You still
Mhm.
have to go through an agent that is appointed by them. They like, and that's one thing that is kind of like really bad about the whole experience in getting policies through insurance brokers, the MGA wholesale model.
Mhm.
Um, I'm allowed to email them. I'm as an agent, I'm not supposed to call them. I'm supposed to answer as soon as they call. And if I bug them too much, you'll get kicked back, right? Like you'll be at the bottom of the list. So I need to be friends with them and only give them awesome business, like perfect, like, beautiful trucking companies that have, the greatest risk management, no claims. All the drivers have 50 years of CDL experience and somehow they're 50 years old. And like, like that's what they expect. And if you don't give them that, then they're not your friend. And like you get kicked to the bottom of or to the back of the line. Right. And the trucker, you're never allowed to call them. You try and call them, they're going to call me, yell at me, and then never respond to any emails for anything you ask for changes. I know that from personal experience.
Right.
Yeah, it's like
Old Tiger says here, I switched insurance agent, couldn't get my new agent to bind the policy because the agent I originally had preemptively
oh,
requested a quote.
that's
That's
called
probably what
blocking
happened.
markets. Yep.
What's it called? You broke up.
It's called blocking markets.
Oh, okay.
So it's like a little trick that agents will do. So if I'm an agent and I don't think I can get you to, like let's just say I have you with Berkshire, this whole year, and we're coming up on your renewal. Your renewal's in 45 days, and I get the renewal quote from Berkshire, and it's higher, like significantly higher. It went up 20% over last year. And I'm like, crap, I don't have any other options for you because I don't have any other insurance companies to go work with. Or maybe I do. Because we're talking about blocking markets. So in an attempt to make sure you stay with me, I'm going to go request quotes from every single insurance company I work with, so that if any other agents, like you tried to go shop through other agents, they're going to be denied quotes because I was the first in line to get you quotes from that broker, that other insurance company. Not all of them work the same. And you can always ask the other agents that you're shopping with to do a broker of record change. But as soon as you do that, then you're blocking your current agent. So in most scenarios, I don't know. That's tricky. Like I would just make sure when it comes to shopping, I say, go for it. Shop other agents. Like it keeps me on my toes. I'd rather learn from mistakes than, cause you an issue where you didn't save money, or get better coverage because became eligible, like as a milestone. Um, that's how I've learned throughout my careers. Like, learn
That,
from.
that's a great mindset. Yeah, that's
Yeah, and I don't look at it as competition near as much as I do collaboration. Like that's my thing. Like the only way any of this gets better, because this is like a very generational, like locked in, good old boy business that badly needs like to come on board with 2023. Because right now we're operating in 1982. Like, uh, it's the only way. It's the only way.
Marty's got a question. Can you have two different MC numbers under the same insurance policy? Probably not.
No.
Um, Cascade says I got quotes from more than Progressive, and they varied by about 4K. Why is that?
Um, there's a couple different reasons here. If you call somebody, so first off, everyone has access to Progressive, just about. Like if someone doesn't have access to Progressive, they probably did something wrong. Like as agents, right? And then you can call Progressive directly, and like I like Progressive, but I wish they didn't sell their own policies because the people that sell them probably weren't there 2 weeks ago and probably won't be there 2 weeks from now. They have a lot of employee turnover. Not to bash them or anything. Like, thank God we have Progressive, because if we didn't, like, then 70 to 90% of new ventures like would have no option, But yeah, everyone quotes a little bit differently, and like if you didn't come and sit next to me in front of my computer and we discuss every box I type something in, and you did that, and like I gave you all of those data points and you took those to the other agents, like they might assume answers to different questions. That's why I built my quote form on my website that asks every single question from Progressive's platform. So like when you get a quote from us, it's the best you can get from Progressive, unless someone else is doing something wrong and like missing something. I tell people all the time, like, you got a Progressive quote from somebody else, send it to me. I'll tell you what's wrong with it. I can identify it in like less than 30 seconds.
Wow.
Many of them, like I can tell you what's wrong, or like, like what's missing. And there's this other thing that I call quote fatigue. When you sit on the phone and tell 3, 5, 10 different agents all your stuff, you start to slip. You start missing things on that second, third, fifth, 10th call. Like, so that becomes issues with variances and quotes.
That's interesting. Yeah. With both feet. So shop your rate 90 days before your renewal, and they can't block you.
Some no, not really. Because if you tried to get a quote 90 days out from a renewal, there's quite a few insurance companies who'd be like, no, we're not ready to quote this. We want to see what happens up until 60, 45, or 30 days prior to renewal. And they want to see loss reports, the loss run reports at that time, dated within 30 days most of the time. So like most insurance companies are going to want to do renewal quotes no earlier than day 45, unless you're a bigger fleet, right? Like if you've got more than 10, 20 trucks, then yeah, it could be 90 days out from renewal. But that's because you got to go through financials. We got to dig through IFTAs. We got to look at all kinds of extra stuff.
Well, Danielle, I think we're gonna not take any more of your time. I really, really, really appreciate it. This is kind of like one of my first interviews, so I hope I did okay.
Oh, it was fun.
Everybody, oh, cool, excellent. Maybe we can do it again. Maybe we can do like a, you know, once a month, you know, thing
Yeah.
where we can take questions, and because I get asked a lot of insurance questions, and I'm like, I don't know, because I'm not the carrier owner, so
I don't know everything, right? Like there's tons of stuff I come across and it's like, okay, write that down, go research it. Like I love getting stumped too. So
I got one more question, then we'll let you go. What's the average cost per trailer interchange?
I like to give ranges rather than averages. The cheapest I ever see, it's like $500 a year. If the interchange, like the trailer limit rate's like 20 grand, yeah, I might see it for $500 a year, and then I might see it if per like if you have one truck on the policy, so you'd only ever have one trailer, because that's the way it rates. It's like how many trailers will you have, and what's the limit, and what's the deductible, right? Those are like the three main factors going into calculating the premium for trailer interchange. So like 500 on the super low end, and like 2 grand on the high end, right? Unless you've got like 70 or $80,000 trailer limit, then it might be 2,500, 3 grand for the year.
It seems like with the cost of equipment, especially trailers. I mean, I paid 30 grand for my trailer in 2018, brand new. It's a dry van. That same trailer, last year was going for 60 grand. I mean, it's kind of crazy.
No, what was a big problem for insurance, and I know we're talking about ending it, but let me mention this. Like the first time ever in insurance, we had to review like extra hard at renewal for increased values, right? Because normally, like at renewal, if you bought a truck last year and it was 100 grand, this year it might be 60 or 80 grand, whatever. But if you bought a truck or a trailer in 20, would you say 2018?
2018 is when I bought my trailer. Yeah.
And then last year, it's like 45, 50, 60 grand. It went up. Like if I'm the agent and I didn't talk to you about the increased value, I'm at risk for that.
Oh,
You come
wow.
after me if something happened to that and I didn't talk to you at renewal about it going up in value.
Wow. That's interesting.
Yeah.
Anything that you want to go ahead, promote your website and
Oh,
your
yeah. Just
YouTube channel?
check out the YouTube channel. I beg people to go there first. It's just truck insurance. I think it's pretty simple to find. And then the name of the agency is charlesstring.com. Or well, the website's charlesstring.com. The name of the agency is Charles String Incorporated. My name's Daniel. Charles String's not a person. It's just what I named the agency. It's a funny story behind it. But yeah, that's it. Man, keep watching this channel. Watch all the others on trucking. That's the best thing is just keep learning.
Well, thank you, Daniel. I appreciate you coming in. I really do appreciate this. So everybody, make sure you give the thumbs up. Go to his channel, check it out. And Daniel, thank you so much again, and we'll talk again soon. Thank you.
Yeah, thank y'all.
All right. All right, guys. That was Daniel Summers of the YouTube channel Truck Insurance. He is a insurance agent for Charles String Incorporated. So I hope everybody enjoyed this show. If I didn't get to your question, I apologize. But we can't keep this guy on forever. You heard him; he was up until 2 a.m. last night trying to get work done. So, with that being said, thanks for watching, and we'll catch you later. Peace.